I just got done recording this whole video and I just realized that I was doing it with my webcam mic, bro. Alright, we're gonna redo this whole shit. Lock in, get your popcorn, get your notes ready. Let's go. We aren't going slow. First of all, if you want to be able to predict what's going to happen next in the markets, you have to look for what's already happened and not what you want to see happen. Just because you see a liquidity sweep, break a structure, and a retracement into a fair value gap doesn't mean that that's the actual move. Even though your bias is probably right, you most likely just entered at the wrong time. So how do you avoid that? In order to catch valid moves, you have to understand that time and price are correlated and the markets are always looking for liquidity, imbalances, or it's consolidating. So with that being said, how are time and price correlated? First of all, you have London, New York, and Asia session. There's also like the freaking Australian session, but we don't really care about that. So the first thing you're gonna do is you're gonna look at what London session did. Actually, the first thing you're gonna do is you're gonna mark out the yesterday. Oh my God. So this is where we're at right now, right? So you have yesterday's high, mark it out, and then you also have yesterday's low. So you have the low and you have the high. And then if you go into yesterday, we also have yesterday's high right here, and then we have yesterday's low. So yesterday's low was easily broken through. Yesterday's high was not touched. Now we have Friday's price action. You have Thursday's high, you have Thursday's low, right? So coming into Friday, you're gonna look at Thursday's price action. First of all, you have the high, you have the intermediate high, and then you have the short-term high. So you're gonna mark all those out too. So you have high number 1, high number 2, high number 3. And then if you look at the bottom side, if you're looking for the lows, you can kind of tell that you have low number 1, low number 2, and then low number 3. We have a lot of equal lows down here, and it just looks more clean on the upside, looking more towards the bearish side. So you're gonna draw a fib from the low to the high. And since we're making lower lows over here, I'm gonna assume that we're probably bearish. So you have the range of the high to the low, the Fibonacci. And as you can kind of tell, you wouldn't want to sell anything down here and you wouldn't want to buy anything up here. It just, you know, if we ever get into any of these levels, you're probably going to want to sell. And if we get into any of these levels, you're probably going to want to buy. And then if you're coming into Friday's New York AM session, you're going to look at what London did. So you're going to look at the 2 a.m. open. I said this in a recent video. The correlation between London's 2 a.m. to 3 a.m. is the exact same from New York's 8:30 a.m. to 9:30 a.m. It's the hour before market opens. So you have 2 a.m. to 3 a.m. At 3 a.m. we form a new high, which is also sweeping this liquidity, which is also tapping into the deep discount of this range. I am claiming deep discount. I want to make a deep discount theory. That's what I'm going to call it, because I'm not going to call it like the assiduous model or some shit. I don't know. All it is it tends to like to go to the deep discount, and it likes to use the PDA raise around there to help continue the trade, as it did, you know, here. So you have the 3 a.m., which is when London opens, and then you have the 350 to 410 macro. We sell off, and then we enter the 450 macro to 510. We consolidate during that time, and then the 550 to 610 macro. That's when we start to gain the upwards momentum. So the 5 a.m. is when I think New York AM session opens. So first of all, you're gonna take this range. You could go from the lowest low to the highest high, right? As you can see, we don't quite reach OTE. The way I like to do it is I like to take away all of the consolidation, and I like to do just like the straight down move. So we have this low. Oh, what the hell? What the? Wait, what did I even click on? How do I get rid of it? What the? Okay, you have this low to this high. I'm personally bearish. You know, this is all after the fact, so it's kind of easier to say that. So the 0.382 is OTE. So we have equilibrium, 0.5. This is when you're going to enter to start looking to sell. 0.328, this is like the most likely rejectable level. You also have this rejection block, breaker block right here. As you can see, we come up, we barely touch it. Might as well mark that out too. See, so we swept this. We didn't really sweep it, sorry, but we tapped into that PD array. We didn't quite reach the deep discount of this range, but that's not what I'm looking for. Let's say you were bullish coming into today. Okay, you take it from the high to the low. Oh my God. What is that? The 0.236 level? The deep discount level? We ticked it! That was also the 8:30 a.m. news. So we did have news at 8:30 a.m. As you can see, news is always reaching for something important. It reached for the deep discount and then it consolidated. I'm not gonna lie, this is kind of where I got tripped up. So I see that we consolidated. We swept that, we make a bearish gap. We inverse that gap. We have this order, no, not really. We have this inverse gap, bullish gap. Swept this liquidity. It could be an AMD model, accumulation, manipulation, distribution. I got caught up in that because I was chasing price and I thought I was going to get left behind. So I took an L right here. Then we came up, we had this inverse gap, we had this fair value gap. I entered here and I got stopped out again for the day. I'll turn on the executions real quick. As you can see, I got burnt. I got burnt real bad. Tried taking a long right here, instantly got burnt. Tried taking a long right here, instantly got burnt. This is also 5 minutes before market open as well. Do you see how many inverse gaps that we're making? Like, if this is your model to trade a breaker structure, liquidity sweep, inverse gap, fair value gap, order block, it's not going to work every time. And that's why you have to correlate time and price together to form the best optimal entry. But anyways, you have 2:30 to 3. 3 is London open, and then you have the time between London and New York AM session open. You have the 8:30 opening price. I got caught on the bullish side because I saw that we respected the deep discount at this level, but I didn't realize that we were just using this to retrace back into here. So we have the low to the high, right? So this is the 8:30 AM low, and then this is the high. You're gonna take that. You have liquidity right here, right before the deep discount level. So you have these highs. You have all these equal highs right here. You have all this, all of this. And then not only that, you have a volume imbalance right here. And then you have another volume imbalance right here with an order block right here. So the reason why we rejected right here is because we have this order block and because, you know, we tapped into the OTE. So that's valid reaction. You take it from the low to the high. You're gonna look to sell above and you're gonna look to buy below. Cool. You have the deep discount right here. You have this accumulation. You have this volume imbalance. And then you have this order block with the volume imbalance below. And this is a lot easier to do after the fact. You know, my videos have been, normally I lose and then I tell you what to do. I did post one video of me working with my model. The only time that I ever actually executed with my model, I won. I've only done that once. Every other time, I feel like I'm chasing price and I feel like I'm gonna get left out. And that's the only reason why I enter is because I'm like, oh wait, this is playing out. This is playing out the way I want it to. Oh my gosh, look at that. I should probably enter right here. Nope, you're gonna get cooked. The fact that I recorded this whole entire video with my webcam mic, it's like, I've already recorded this shit and I don't know what to say anymore. But yeah, I've made a lot of videos on like models and what to look for, but I'm making this video because I've taken a pretty fat L this week. I ain't even gonna hold you, but it's just because of my characteristics, like what I'm doing to do all this shit. This week was just a sloppy week. You know, we had a decent day. The fact that I'm actually on the Express now, I'm trying to make it work and I'm chasing price like a dog, bro. Like a dog to a squirrel. I'm just very disappointed with myself. That's the reason why I'm making this video. I was gonna post this video yesterday, but I didn't. And maybe it was because I needed to get that full thought out. I mean, I got the fucking full thought out, but the whole entire video got corrupted pretty much. It sounds like shit. And okay, so it's Friday. We're gonna come into next week strong. I have 728 distance to maximum loss limit. I'm hoping that I will win either Monday or Tuesday. I'm only gonna follow my model because it seems like the only time that I don't follow my model is when I lose. So why the hell am I not following my model? The one and only time I did follow my model, I won. And it's like every day I see these setups, but I don't want to follow my rules. And it's like, I'm scared maybe. Maybe I'm scared. I don't know. I need to trust God more. And maybe that's why I'm making this video, because you have to lose. Losing is inevitable. You can't avoid it. You can avoid it, but it's pretty hard to. The way you avoid it is by building a model and following the model and not chasing price and not breaking your discipline. And there's so much shit that goes into trading, guys, and it's just like damn. Anyways, Monday and Tuesday are supposed to be good. We have another CPI PPI week. That's cool. Monday normally plays out pretty decently. That's when I banged my trade, I'm pretty sure, to pass funded. Tuesday also plays out pretty good. I could have made a crazy amount, but I had a tough break even. And then Wednesday I lost, Thursday I lost, Friday I lost. And it's because I'm chasing price and I'm not being patient. There's a lot of shit that goes into this shit. And I'm not even following my deep discount theory. I'm going to study this deep discount theory. I'm going to start posting banger ass trades on TikTok. That's probably why you're here watching this channel, because you've seen something of mine on TikTok, or you just saw the thumbnail on YouTube and you're like, oh damn, okay. With this being said, I will be selling a mentorship in the future. I will be having a Discord in the future, maybe. I don't know. That shit seems chaotic as hell. I don't know if I'd want to do that. So, but I'll figure something out in the future. Right now, I need to focus on myself. I need to focus on my model, and I need to take a deep breath, bro, because I'm doing this shit to myself. I'm failing to fully analyze where I'm at in the markets, and it's just I'm kind of doing what I want to see, not what's already happened. And that's why I started out the video with look for what happened and not what you want to see happened. That's a very, very key detail. And currently I'm getting my ass handed to me because I'm trading like a bot and I'm trading for the money. I'm not trading for my model, I'm trading for the money. I'm not trading what I know, I'm trading for the money. And I'm not trading based off analysis, I'm trading off patterns and for the money. Maybe I'll post a video on Monday too, maybe I won't, but I wanted to get this video out because it is very important that you lose in the markets, because if you don't lose, then you're not going to learn, and then you're going to feel like you're the man, and then you're just going to start doing shit based off what you want to see happen, and you're not even giving Nasdaq the room to breathe. Like, what are we talking about? This is Nasdaq, the most highly manipulative market, the most highly manipulative casino in the fucking world. Let's go over today's trades real quick. Real quick. Coming into today pretty fresh. That's pretty nice. It's pretty nice. Okay. We have a retracement into this level. As you can see, I already had it marked out. I already know. I saw how we reacted off that level. I had a limit buy down here. I ended up moving it to 23838.75. This is where my limit was. 23838.75. This is my limit. Could have hit it, went up, break even, and then we ended up selling off a little bit more. So I could have lost if I didn't go break even here too. Today was probably just going to be a losing day no matter what. Like, I honestly couldn't have avoided that. And then I start, seeing how we do. I'm watching price action, and I don't even realize that we're consolidating, bro. Like, I see that we break down. Okay, I see an inverse gap. I see a fair value gap. Enter. You're out. And then because I wanted to chase price, now I have a 142 RP&L. I'm down $142, and my daily risk is 250. And I can't extend my risk again, because if I do that, then I'm just gonna blow the account. So now I have a shitty position size. I'm about to be locked out for the day again. And I think, you know what? We have a fair value gap. We have the bottom of the inverse gap. We have another BPR right here. We have an order block right here. It's at the OTE of this range. We're going to come down and we're going to get that for sure before we go back up. Look at this. We have a break structure as well. And it's not even at OTE. It's below the consequent encroachment. And I think I see that, and I move it down here. I do indeed move that. That's what I'm looking at right now. I did move it. We have another good reaction. I'm going to see where it's moving, right? We extend the fib. Oh my gosh, now my limit buy is at the OTE zone. I'm like, man, this is gonna play out. What the fuck? Number one, I don't have a stop loss set because I have the automatic PDL. Let's just see what happens real quick. Just as, final thoughts. Let's watch this price action together. Okay, actually, never mind. Oh yeah, no, we just have random liquidity injection. We sweep this. And I was like, okay, well, it didn't take me out of the market. I have the PDLL. It's going to auto-liquidate me and block me out. I think after this, we could retrace up a little bit. And we do. And I don't move break even here. I get greedy. Guess what happened? Got stopped out here. And then I don't even remember what happened. Actually, I think it still liquidated me. I was done for the day after that. Then we have this video. I really started this shit off, but this is a very unfortunate situation. I got stopped out here. I took these 2 trades. I got locked out. This is my level that I was looking for, bro. Look at this. Look at this. And then, actually, no, yeah, we come back up again. I could have gone break even here easily. I could have easily, oh, damn. I'm not even waiting for my levels to get hit, bro. I'm really chasing the hell out of price. And then, let's go into yesterday's trade as well. Coming into yesterday, I'm already down 137. What the hell? So we have this sell off. Okay. I have a limit buy down here. We don't quite reach that limit buy. That's alright, I like how we stopped right here. We inverse this gap. I set a limit buy right here, right? Remember this. 23827.00. So it can't go below 238.7. What the hell? 23817.00. I use a 10 tick stop loss. 10 ticks or 10 points, 50 ticks on Nasdaq charts with one contract is $250. That is my risk. That is what I've built into my model. And that's just kind of what I do. I took a fucking L here too. Sorry for cursing. Sorry for my party language. Consequent encroachment of this inverse gap. Break it here. We have an order block here. We have a fair value gap here. It looks pretty good, right? Nope. Nope. Instantly not. I stop and I extend my PDLL again. It's 8:54 a.m. It's not even market open yet, and I'm already down 438. I've already extended my personal daily loss limit, and I'm already... Guess what I do? I extend it again. Remember, my limit buy was at the bottom of this gap. It was at the deep discount of this bottom side rejection block. It was also at the bottom of the gap because I know that we're going to low-key disrespect this gap. We'd like to close outside of it. I see that we have good reaction here. I take away my limit order. For some reason, would have been entered right here. So we have this gap. We have this order block. As you can see, we're allowed to close outside of this inverse gap. That's kind of what happens. We go a little bit lower. We're still kind of, haven't really dug into this order block. And we start doing it here. And then we have good reaction off that. That was the only time that we went back down. We use this gap. This is an order block that down candle before the up move. We use that. We use this order block. We use this order block. I probably should mute it. And then we're staying inside of this range bound. Then we expand out. I have a limit buy down here. Guess what, buddy? You're too late. Since you didn't want to trust this limit buy, I could have literally bottom ticked the retracement. I could have been eating hella good, but nope, I didn't because I was scared. What did I do instead? I took a counter trend at the inverse of this gap. It was a BPR actually. So I just, consequent encroachment of the BPR. This is a counter trend trade too. Keep that in mind. So we get filled. We're about to get stopped out. I'm probably, breathing heavy right here. Finally, we get put in profit. This is counter trend trading. We have this liquidity sweep. We actually have a break structure here. We have this untapped gap. We have this gap. We don't even fully inverse it. I could have gone break even here. I was up a decent amount. Boom. You got stopped out. You got locked out. You got liquidated for the rest of the day. That happened twice in a row. 2 days in a row, I should say. But that happened 4 trades in a row. 2 trades in a row. I won 1 trade. I went 0 for 6. I'm trading sloppy on my express, bro. Maybe it's fear factor. I don't know. But these temptations in the market are really getting to me, bro. And maybe it's because I want to see myself make a lot of money. I don't know. But it's fucking me up. I won decent on Friday. I won decent on Tuesday. So we passed the funded on Monday. Hopped on the express on Tuesday. 4 for 4 on Monday. Fuck. I went 4 for 4 on Tuesday. And then I took an L. My maximum loss limit, distance to maximum loss limit is 728. I have enough for Monday and Tuesday to be full 1 trade positions. If I lose Monday, Tuesday, and I lose Wednesday, I'm looking for a 1 shot, 1 kill. If I somehow lose every single day, I will blow this express account. And that means I will have to get a job. So, whatever happens, happens. I see these levels. I mark out these levels. They would play out, but instead I take away my limit and I move my limit up. I move my limit buy up because I don't think it's going to come back. I'm going through some mental battles. They aren't like, I want to, unalive myself battles, but it's just like, damn, like I keep on making these dumbass mistakes. I've made them multiple times before, but I still keep on making the mistakes. It's like, I don't know. I felt like I was bound to make a video like this. Losing is going to happen in your trading career. You can't avoid that. I'm just going to post this video because if you have a losing day, I would take the time out of your day to understand why you lost. And that's the most progress you're going to make. There's no shit you can find in a YouTube video. No shit you can find watching ICT. No shit you can find in a mentorship unless you buy mine in the future. Leave a like, leave a subscribe. But we're going into the weekend. I hope you guys have a good weekend. Me personally, I am going to have a good weekend. I don't even know what I'm saying anymore, bro. Fuck my life, bro. Fuck my fucking... Just kidding. Leave a like, leave a subscribe, leave a comment. And thanks for watching.